If you're pretty sure your work qualifies for R&D tax credits but have no idea what actually happens between now and the money landing in your account, we're here to help. Ireland's R&D tax credit is worth up to 35% of your qualifying expenditure, and the process for claiming it follows a fairly fixed sequence. The first step is confirming your activity actually qualifies. Revenue's definition asks for a genuine scientific or technological uncertainty, systematic work to resolve that uncertainty, and an advance that goes beyond what's already publicly known in your field, not just what your own company happens to know. Plenty of technically demanding work is really just applying existing knowledge in a known way, and that doesn't qualify, however difficult it was to execute. Next, you need to check whether you need a pre-filing notification. If this is your first time claiming, or you haven't claimed in the last 3 accounting periods, you'll need to submit one before you can file. It has to reach revenue at least 90 days before you submit your actual claim, and there's no flexibility on that deadline. Once that's sorted, you need to identify and apportion your qualifying costs. This covers staff costs, subcontractors, consumable materials, software and cloud computing costs, rent in some cases, certain overheads, and capitalized costs like plant and machinery. Across all the categories, only the proportion that actually contributes to R&D counts, and you need to be able to explain and defend however you've worked that proportion out. Alongside your costs, you should prepare a technical report. This is what proves that you did qualifying R&D, what you were trying to achieve, what made it uncertain, and what you did to resolve that uncertainty. Revenue doesn't ask you to submit this with your return, but it's the first thing they'll want if your claim gets picked up for an audit. The best time to write it is while the work is still fresh in your mind, not months later once staff have moved on and details become fuzzy. From there, you'll file your claim through your corporation tax return. You'll also decide how you want to receive your credit, since Ireland pays it out over 3 annual instalments, either as a cash payment, a reduction in your corporation tax bill, or a mix of both. Remember, your claim needs to be filed within 12 months of the end of the relevant accounting period. Finally, once your claim is filed, hold on to the records. Revenue can request more information or open a full audit, and claims can come under review for up to 4 years after the accounting period ends. Each of these steps is straightforward once you know where it sits in the sequence.